Welcome back to the deep dive. Today, we're jumping into a specific trading tip.
That's right. It's from Miss Mansi's trading tip number 4.
And the core idea, straight up, is about timing your option sells.
Yeah.
Specifically, waiting for a counter trend move to basically run out of steam.
Yeah, exactly. Before you consider selling those out of the money or OTM options.
So our mission here is to unpack that. Why wait? What's the logic for someone, looking at option selling strategies?
Precisely. It's less about crystal ball predictions and more about managing probabilities, especially from that seller's perspective.
Okay, so let's start with the first bit, the dominant trend. What are we actually talking about there?
Think big picture view. Over the time frame you care about, is the price generally climbing, falling, or just chopping sideways?
Right, the main direction.
That's your dominant trend. It's like the main current in the river.
Got it. And then comes the counter trend. How does that fit in?
So the counter trend is a temporary move against that main current.
Like a little eddy or swirl?
Yeah, a pullback if the main trend is up, or maybe a small rally if the trend is down. Miss Mancy's point is really about patience during these little detours.
Okay, patience. Now, she gives a specific marker, 3 ATR, for knowing when that detour might be over. Can you break down ATR for us?
Sure, ATR stands for average true range. It essentially measures, how much the price tends to move on an average day. It's volatility, basically.
Okay, a measure of daily movement.
Right. So 3 ATR suggests waiting until this counter trend move has stretched about 3 times that typical daily range.
Why 3 times? Is that a magic number?
Well, it's a guideline. The idea is that a move that large against the main trend might be exhausting itself. It's losing momentum.
So it's a sign the counter move might be done.
Potentially, yes. It's a signal that the force pushing against the dominant trend might be weakening. Now, 3 ATR is her rule of thumb. Some traders might use 2 ATR or 4 ATR, depending on the market, their own risk tolerance.
Right, it's not set in stone. A lower number might mean getting in earlier.
But maybe with more risk, the counter trend isn't quite finished yet. Exactly.
Okay. Now, I found the language interesting. Be a coward. Hit the weakest in the belly. What's the strategic thinking there for an option seller?
It sounds aggressive, but it's actually about risk aversion. Being a coward here means not jumping in too early, not trying to catch the exact turning point of the counter trend.
So waiting for more confirmation.
Yes. You wait until the counter trend seems like properly weakened, the weakest in the belly part. That's when you consider stepping in to sell options.
Why is that moment supposedly better for the seller?
Because the theory is the dominant trend is more likely to reassert itself then. You're selling when the temporary pushback has hopefully faded, improving the odds, that the price won't move sharply against your sold option.
Right, hitting it when it's down.
Sort of. You're trying to
Yeah.
find a point of lower immediate risk where the probabilities seem tilted back in favor of the main trend.
Okay, that leads into the actual action, selling 200 to 300 point OTM options after this exhaustion signal. Talk us through that part.
So OTM options out of the money mean their strike price is, well, away from the current market price. For sellers, the appeal is that these options have a lower probability of ending up valuable to the buyer by expiration.
Meaning they're more likely to expire worthless, which is good for the seller.
Exactly. You collect the premium up front, and if the option expires worthless, you keep it. Selling them 200, 300 points away gives you a buffer zone.
But the premium collected would be smaller too, right? Less risk, less reward.
Generally, yes. And the big risk, of course, is that the market doesn't revert to the dominant trend. Even after a 3 ATR counter move, the trend could just reverse entirely.
This is definitely not foolproof.
No trading strategy is. It's all about probabilities and risk management.
Right.
This is one approach to try and tilt things slightly.
And it's crucial, as the tip emphasizes, this is really framed from the option seller's perspective.
Absolutely key. Option sellers often win if the price doesn't move dramatically against them, or even if it just stays flat. They profit from time decay as well. This strategy aligns with that goal selling when volatility might be expected to decrease after the counter trend fades.
So you're not necessarily betting on a big directional move continuing, just that the counter move is over.
Precisely. You want the dominant trend to gently resume, or at least for things to calm down, allowing your OTM option to lose value over time.
Okay, let's try and nail down the key steps here from Ms. Mancy's tip number 4.
Right.
First, identify that dominant trend, the big picture direction.
Yep. Step 1.
Second, watch for a counter trend move and be patient. Wait for signs it might be exhausting, maybe using that 3 APR idea as a guidepost.
Patience is key there, yeah. Don't rush it.
And then third, If that signal appears, consider selling those OTM options like 200, 300 points away, keeping that seller's mindset,
That captures the essence of it. It's a specific sequence for a specific goal.
like a methodical approach.
And, stepping back, it raises an interesting thought for you listening. This whole principle of identifying a main trend and waiting for a counter move to exhaust itself. How might that apply elsewhere?
Hmm. Beyond just this one option strategy.
Yeah. Think about broader market analysis, maybe even other types of investment decisions, or, I don't know, even non-financial situations. Does waiting for the rebound or pullback to lose steam before acting have wider application?
Interesting point. The value of patience in identifying when a reaction might be overextended.
Exactly. Something to maybe mull over the power of timing and waiting for confirmation.